To talk about the role of the California Insurance Commissioner. In California, we have an elected insurance commissioner that came about due to the voters' passage of Proposition 103 on the 1988 statewide ballot. The insurance commissioner in California regulates almost all lines of insurance in the state, with the notable exception of workers' compensation. The commissioner heads the California Department of Insurance, the CDI, which was actually created in 1868 as part of a national system of state-based insurance regulation. And today, CDI touts itself as the largest consumer protection agency in the state. Nearly 1,400 employees work at the CDI. They oversee more than 1,300 insurance companies. They license more than 410,000 agents, brokers, adjusters, and other business entities. In the normal course of business, the CDI annually processes more than 8,000 rate applications, and they issue about 193 new or renewal licenses. And they also perform hundreds of financial reviews and examination of insurers who do business in the state of California. Obviously, the CDI enforces the insurance laws in the state of California, and it has authority over insurers and licensees who conduct business in the state. License fees, assessments, and Proposition 103 recoupment fees are the primary sources of funding for the CDI. Now, there's only one section of the California Constitution that deals with the insurance commissioner. It's found in Article 5, the executive branch, Section 14, and that provides that the conflict of interest provisions that are applicable to all state officers also apply to the state insurance commissioner. In terms of the statutory provisions, as you can imagine, there are thousands of them in the California Insurance Code. I just wanted to touch upon the few that are contained in the Government Code. Article 3 deals with staff, and Section 11200.1 specifies that the governor, upon nomination by the insurance commissioner, is required to appoint nominees as one chief deputy of the department and one as deputy director. And those two individuals serve at the pleasure of the insurance commissioner. Absent an affirmative appointment by the governor, the nominee or nominees submitted by the insurance commissioner must be deemed appointed by the governor 30 days following their nomination by the commissioner. In Article 2, it concerns the security for deposits. Section 16616 says that the insurance commissioner, if the treasurer so demands it, the commissioner must issue a certificate showing the qualifications of any admitted surety insurer as surety for those deposits. In Section 16617 of the Government Code, the bond of an admitted surety insurer must not be accepted as security for deposits unless it has been certified by the commissioner as meeting the requirements of the law, and unless the surety insurer also holds a certificate of authority from the U.S. Treasury Department. And that basically shows that they are eligible as surety on federal bonds. Government Code Section 16528 provides that the bond of an admitted surety insurer must not be accepted as security for demand or time deposits unless those have been certified by the commissioner as meeting certain specified requirements. Article 2 also deals with exemptions from disclosure, and Section 6276.26 of the Government Code allows exemptions from disclosure governing the reporting of improper governmental activities for insurance claims analysis, informal conciliation of complaints, information from examinations or investigations, writings filed with non-disclosure, fraud reporting for information that's not part of a public record, licensee information, insurer application information, insurer financial analysis ratios, as well as examination synopses. So those are the government code provisions related to the elected state insurance commissioner here in California.